of the questions, I mean, I love presentation from Hartesh, you know, and one of the questions which is basically coming out of this is, you know, what if someone is stealing the funds from you, what they can do, where they can go, right? And how you prevent from actually being subject to, you know, this kind of action. And I would say we are additional level, the anti-money laundering is additional level of protection. Because if you cannot launder the proceeds of crime, it's actually helping to prevent them as well. All right. So I was asked to tell you a little bit about, you know, the anti-money laundering, how the cryptocurrency and how blockchain is going to be changing this space. And you know, I'm glad that, you know, we basically have a lot of people who understand this technology, so I can skip a few slides, which we typically do. So what I tend to say recently is, and you had some flavor on the, you know, on the panel with me, that, you know, I think, you know, the blockchain will be the future for transparent economy, transparent and secure economy, and also in terms of regulatory framework. I think, you know, and this is my out of 14 years of experience with large financial institutions when I was global head of AML for Royal Bank of Scotland, and I tell you that the level of let's say, you know, data which you can get out of blockchain and how you can help with anti-money laundering and compliance, how effective you can build, it's actually excellent. But let's move on to, you know, I mean, let's first talk about these things. So what's common in these statements? What's common? And these are statements about our industry, right? So we have, you know, Jimmy Dimon, it's fraud, child abuse imaginary fund within Bitcoin's blockchain. You know, this is general about, you know, like can be hacked, blockchain can be hacked. Money laundering index, and that's my favorite, Larry Fink, BlackRock. So what's common? It's actually misleading, it's misconception, right? We have to deal with this, you know. So Jimmy Dimon, sorry for the D in the name, Jimmy Dimon actually said, you know, he regrets calling Bitcoin fraud, right? So this is you know what he came back on CNBC interview. The Guardian, you know, the imaginary which we find on you know, child pornography imaginary which they found on the, you know, blockchain is actually back from 2010. This was the news in 2010. So again, this is something which was brought up, you know, recently. You know, the hacks and losses. So some of the comparison, you know, and we put CoinCheck, you know, in Japan when the money was effectively returned. And in comparison with the traditional finance, Lehman Brothers, Bear Stearns, and AIG, I know some people who lost, you know, all the salaries basically, you know, for many, many years with AIG. Nobody returned the money, right? But nobody is talking about this as well. I mean, we should be, you know, bringing up a little bit of these cases and in comparison. And money laundering. So this is my favorite topic, you know, and I love, you know, talking with the regulators. I love talking to the banks about this particular topic, how we can be better in the industry. So let me go down, you know, into what is the size of the problem. That's the size of the problem currently. $2 trillion laundered annually in the traditional finance. That's 2 trillion. What's the size of the, you know, market cap right now today? Anyone? Very quickly. How much? 230 billion, right? Compared to this one, you know, they say that, you know, cryptocurrency is a problem. And do you know how much of this is actually stopped in the traditional finance? Again, you know, in comparison, that's not even 1%, which is, you know, the money which is stopped. With all the effort, with all the, you know, things which are implemented in the world, you know, regulations are increasing. You know, virtual currency regulations, you know, they are put in place to close the gaps. We have global regulators as well. So when we discuss, you know, what kind of frameworks you want to build in for your cryptocurrency, I mean, you need to look at your jurisdiction, which you have your project, so let's say Gibraltar, but also, you know, if you operate internationally, it's good to have a look on the international level, especially US or, you know, some major markets, right? So just to avoid any kind of risk which is obvious. But this is the picture which you typically deal when you have international framework. And AML is a complex issue because it's not only dealing with anti-money laundering, it's not only dealing with money, but it's also terrorist financing, different regulations, different approaches, different technologies, So virtual currencies, for banks, why banks don't want to open up for crypto? Because they don't know how to handle this problem, right? They don't know, they don't understand the technology. They don't know how to adopt them, right? It's another pain for them, another risk which they don't understand. And that's addition to, let's say, for the others. And one thing which we, like to say also, it's many times, and today we had great flavor of this. Many times, everyone is thinking about anti-money laundering as a regulations, equals compliance, KYC, know your client. It's not, so it's checking ID. It's not AML compliance, right? There's so much more, and we're going to talk about this. So this is, I broke down, and this is kind of what you need to have when you want to be compliant, right? Policies, procedures, risk matrices, risk-based approach, KYC, that's part of the, framework. Identification, verification, sanctions checks, PEPs, politically exposed person, negative news. Monitoring, right? Source of wealth, source of funds, ongoing monitoring, profile matching, if something changed or not. And then you have to have the trainings, reporting, and you also have to have someone responsible within your organization to be, kind of put in jail if something goes wrong. And, the interesting part, if you broke this down, it's like the ticket for this, right? The cost is quite high. So this is what currently is happening on the market. And if you don't get this right, you have these guys, So I can imagine, how the guy from BTCE, was surprised when he was in Greece, right? And seeing basically the feds. So this is the regulator coming into your place, right? Interestingly, there's some statement from Europol that there is around 20 billion euros spent annually by the banking and finance industry to make it compliant. And you remember the effect which was coming out of this. So it's like it's not even percent. It's actually statistically it's probably without the system statistically that you would catch if you would just randomly try to find someone on your system, you would get better results than with the whole systems which you have currently. And, the guys, they still don't get this right. So BNP Paribas, $9 billion fine. HSBC, one of my favorite case, HSBC, HSBC is really interesting one because, HSBC was in front of US Senate, and you can get the US Senate, let's say, report, what happened, how HSBC was doing money laundering. It's really exciting, so it's like criminal actions, like shipping, money from Mexico into US and stuff like this. So it's really, really interesting part. Okay, old system versus blockchain. So what we discuss is old system. So sorry for the picture, but in general, the difference, it's the best is here. Right, so it's a blockchain is a ledger of transactions. You can get out of data, data out of this, and in comparison with the traditional banking, right? This is the new solution. This is the traditional banking solution. So if something goes wrong, in my system, and I want to see the funds are coming to me, right? And I want to see, what is basically, the source of this funds. What's the risk connected with this? I need to call my friend in the bank when the compliance officer who is dealing with this kind of things. And if the transaction was coming to him and it's like, listen, we got this from JP Morgan, I need to call my friend in JP Morgan. So he's calling the friend. So you can imagine, how easy it is to actually launder the money in the traditional finance in comparison. And this is basically what you do in blockchain, basically. You don't have to call anyone. You just go through this, right? You just look for data. You just look for anything which is suspicious. The information which you are getting out, so this is, I'm saying this because this is what we are doing. Like, we look for different information, data points, and we collect them, and we match them with external sources, and then we make sense out of this, right? And we, like we have terabytes of data. And the report, which is basically we are getting is like split seconds basically. So this is the comparison. This is basically what's there. It's a public blockchain, so we can get this public information, analysis. If so they ask, many times we are asked, can you do this for traditional banking? And I said, yeah. If you open all banks, transactions, and if you open SWIFT transactions and you put them together, we can do this, no problem. But with the crap which you have in your banks in terms of analysis, it's no point, right? And then you saw the picture again, and what's changing right now? Monitoring stupid. So it's, I say that KYC, forgive me for saying this, but I think, the KYC part is just, going nowhere. Like, you can set up a company in BVI, right? Or, some other secretive jurisdictions, which you don't know who is the owner, right? Or you can have basically hidden shareholder, right? And etc. So this is how you, transfer funds without knowing who is real beneficiary, right? So, but what you can get is, really, excellent data from monitoring. So shifting from KYC into monitoring. First, much more quicker, much more effective, and much cheaper as well. So standardized monitoring to replace expensive and ineffective KYC. Central repository of data, and I believe it's going to be also decentralized at some point, and we want to be decentralized this as well. Onboarding process based on history of transactions, ongoing profile matching. So, one of the best, one of the best things is to see, okay, we have this guy and this is the profile. And so he has monthly payments coming in and this is the size of the payments, like, I don't know, 10 BTC, right? Or 100 BTC on a monthly basis, right? And then you suddenly see that, he has a lot of different transactions. And suddenly someone is, the profile is changing. So it could be that you just got lucky and you just got some better business to do. You start, trading on the exchange. Someone hacked into your profile, or basically someone, is using your account. There could be, some really different stories for really different points. Checks only for transactions above certain thresholds. This is where we want to go. This one, So I say, why as an industry we want to do KYC for every person who is coming to us, right? Why should we do this? We should do this above, I don't know, 1,000, 2,000, 3,000, wherever we get comfortable. But, punishing everyone, for failing to do proper, monitoring. So we need to KYC everyone who is coming to us. That's crazy. I think that's insane. What we should be doing is focusing more on the information which we are getting out of blockchain. So we work with banks and financial institutions to kind of help them to onboard as well crypto. Right? Or, companies who are using crypto. And you can do this. You can do this and in the really secure way, to increase basically visibility into crypto space. This is how we do, monitoring as well. So we pull together this different source of data and we get the report. We want to, create a simple approach. And so we work with a few financial institutions, some large banks, especially in Japan. And what we find out is with blockchain, the technology can be 90% more effective. So you remember, not close to 1%. We can almost get to 90% in terms of, finding out if something is illicit, illegal, and 10 times cheaper. So, we see basically the change. We see, this coming. And we can prove it as well. So we have the data. So when we sit down with the regulators, right, and we talk to them, this exchange is in the, some offshore jurisdiction. Yes, we just mark them as high risk. This is, you don't know where these funds are going from. Do you know where the funds are coming to the bank? You can use PayPal, you can use any other providers to mix it and, to channel this. All right, and this is something which we like, so what we say, there's no fintech without regtech, but also, if you build something any innovation, right? There's a lot of interesting projects, really exciting one. And many times you tend to forget about efficiencies around these processes. And then you just getting big and you just implement these processes. And if you don't do this from the start, you're going to end up with the old problems. That was on the happy note. Thank you very much.